Hey, we're live. Welcome, everybody. Let's see. Oh, gee, Andrea is the first one here today. Wonderful. Great to see you. Just say, hey, everyone. And I think, yeah, I've got Richard over there. Great. So wonderful mid-September afternoon. The weather's cooling off. Just love this time of year. All right. And to boot, we've had some pretty good trading lately. So I'm looking forward to talking about that. We've finally broken out of those summer doldrums. And we're starting to get some nice action. Let me go here to chat. Pierre, we got Cor from Holland again. Good to see you as always. Good to have the Dutch around. Richard, how are you doing over there? Everything good?
Yeah, everything's great. I'm glad to see some Vol back in the market. My systematic book's taken a bit of a hit as Vol was risen, but that's entirely expected. I spent the entire morning doing surgery to put the book back into earning territory. My little slightly more speculative home savings book done fine is weathered the Vol increase without losing any PV, so that's nice.
Mm-hmm. Well, I'm not sure how much Vol. Well, I mean, Vol's increased, but it hasn't exploded up.
Where are we now? Well, it fell back a bit, didn't it? Yeah, we're currently 1 month 37.5 at the money. But the risk reversals are going more positive. So because I've got more short calls than short puts, that should hurt me, but actually doesn't. Because the decay has been matching the Vol increase.
And as I mentioned to you just prior in this morning, I was mentioning it to our private Telegram group to our students. I was saying that, it's interesting. Look at the volatility service for Bitcoin and Ethereum is a little bit different right now. They used to be practically the same forever, but right now people are a little bit less enthused in the very short term. Up to October on the call side for Ethereum, whereas for Bitcoin they're, it's a bit stronger. So short-term sentiment in Ethereum is a little bit more to the downside than it is in.
Actually, for the past yesterday and the day before, we were actually getting negative funding rates on Ethereum perpetuals. So I have an experimental book which is just purely short perpetuals and long underlying, and that almost invariably prints a little bit of money every day. I mean, it's tiny amounts of money, but it prints money. And yesterday and the day before, it lost money. I mean, not huge, like $1 a day, but and that was also true on CME. So I haven't actually gone into investigate exactly why that's happening. You'd think that if it was due to sentiment, then you'd see more downward motion in Ethereum and you'd see stronger negative risk reversals, but we haven't seen that. So it's interesting.
All right. Hang on a sec. We got Harley here from New Zealand again. Great. Oh, Andre from the Netherlands. Now, is this the Andre that we know from personally we know from the Netherlands? Because we seem to be accumulating a lot of Andres from the Netherlands lately. Maybe that's a popular name a few decades ago. But I assume everybody can hear us. Nobody's complaining, so I'm making that assumption.
Yeah. Come on, get started.
Get started here. Okay. Start with a poll. I'm going to cover the poll results from last week, too, in just a minute, okay? So the poll is, we've had this big dump. We've come back up. We've got all these numbers this week, right? So we knew there's going to be a roller coaster ride. Do you think from here, the next 30 days, we're going to go up, down, or in a sideways channel? And I will reveal what I think is going to happen in a few minutes. Right now, we're about even, so we can come back to this poll a little bit later on. And let me just jump over to my screen and we'll take a look at some charts. Just a second here. Okay. Sorry, technical glitch. There we go. We're back. Okay, so interestingly, I was looking at Bitcoin over the last couple of days. Yes, Bitcoin had a little spike down, but it wasn't, didn't plummet or anything. It was, a little bit more dramatic in Ethereum. So it really, once again, we've got this kind of, this sort of sideways channel going on there, right? As it tends to do, as we see crypto to do. And when we start getting into a channel, I love selling strangles or iron condors on each side. So we broke down out of it. Would a technical analyst say, no, it's been broken, we're on the down yet? And could this just be because of the numbers? ECB number came out like 15 minutes ago or 30 minutes ago or something. They raised raised by 25 basis points. So is this the result that we're going to go right back down? I think probably yes, but maybe not. But the interesting thing here is if I get rid of these, and actually I'm going to go over to my ETH chart. So we had the big move down. Wonderful. Got the sideways channel. We start trend down. But when we look over at Ethereum, it's sort of the same thing. And someone could say, well, you know what, Shane, we're kind of in a little bit of a sideways or a little bit of a downward channel. And I would agree. It's not super distinct. It's not for a very long period of time, right? And what do we do when things start to pop up above the top of the channel or reach the top? Well, we sell calls. Sell call spreads. That seems like probably the most appropriate thing to do, as I expect this to come back down into the channel. Now, whether it continues sideways or continues down, who knows? Who knows? But that's sort of the general go-to strategy when you get any type of a trend and the price action bumps its head on the top of the trend or the bottom of the trend. We'll sell call spreads or put spreads. Now here we can see I've got the same old diagonals I've had on for ages. Those are all doing good. And what I do every single week is I sell the weeklies against those long calls and long puts in order to make those long calls and long puts free. Some of them were coming to mid-September now. Some of them are already free or almost free. So wonderful. If they pay off, bonus, and I'll be super, super happy. Now, I did put on a 22 September 1,500 or 1,400, 1,500 credit spread. So I sold the 1,500s on that dip down, and I bought the 1,400s as cover. Golden. It's looking beautiful right now. I'll probably cover that pretty quick. I might have already put orders into cover. I can't remember. I think I'm up at least 50% on it, so I'll probably cover it. Now, the one thing I did want to talk about here while I'm yapping about charts is last week's poll was, what do you think I should do? And I gave a whole bunch of different strategies. I think I gave about 4. And the consensus, I think it was 60% consensus said, sell an iron condor. So I did. But what happened was we had this little spike up right around here during last week's call. And I sold a call spread. Okay. I didn't get filled. I got filled in the first lots, but I was hoping to go up a little bit higher and I'd sell some more. And that's what this is here. That's what this is right here. I sold some 1,800 calls and I bought the 2,000. So they had a $200 spread on those. And then we plummeted down here, and that was my excellent opportunity to sell some puts. So I sold the 1,500 puts and I bought the 1,300. So they're both equidistant. They both have $200 spreads on those wings. But I got filled everything on the put side. So the call side, I'm trying to, on this little spike up, I was trying to sell a little bit more to even them out. It doesn't matter to me if they're even or not. I just thought I would. But that was a wonderful call. That was a wonderful call. You guys made some money so far. I mean, we could get a news play and Ethereum drops to 1,000 or goes to 3,000 in the next 20 minutes. I don't know, but for the most part, that's looking pretty good. And those are rapidly decaying because they're 29 September. Again, here's what they are. They're the 29 September 1,500, 1,300 puts, and the 1,800, 2,000 calls. And this line is the expiry date. So this comes right down here to the end of October. So great, wonderful. And I'll manage that. Hopefully, so next week's call, maybe I'll be out of some of it. We'll see. If we go sideways, I imagine I would. Let's see. Was there anything else I wanted to talk about here? I don't think so. Oh, yes, I did. On this drop down, sometimes, old habits die hard. They just really die hard. And, I was a scalper for years and years and years and years. And I happened to be sitting in front of the computer and I could see this warming up. I could see the tape. I could see the charts. I was like, you know what? I'm going to buy some puts. So what did I do? I bought some 3-day expiry. I think I bought the September 13. Must have been on the 10th, I think. So I bought 2 or 3 days to expiry. I bought the 1,600 puts and 15, 20 minutes later. And for those people who are in our Telegram channel, they may have followed that trade if they wanted to. That was lovely. I took the first third out at 100% profit and the second third out at 200% profit. I was looking for something stupid like 500% in the last one, but those expired almost at the money worthlessly. But that was a nice little scalp. And I don't do those too often. Just sometimes I happen to be in front of the computer when I happen to see something. And that was really, really nice and a little bonus for our members there. That's about it, I think, for what I want to talk about with charts. What I will say right now, and I'll go over to the poll. So it's interesting. 55% of people right now are saying that they think we're going to go sideways. And I agree with you. I agree with you. If anything, I would put the next allocation to going down. But people here said, no, up. So up is 30%. I think we're going to go sideways and then maybe down. I could be wrong. Again, I'm not a predictor, but I'm happy to sell volatility on both sides for now. I love this iron condor. If we keep going, I might start to sell some Octobers as those October weeklies start to come available. So we'll see. Again, what I love to do, and when we look at this chart, I didn't put this iron condor on in one trade, right? I waited for a little spike up, and I started to sell the calls to get more premium. And I was hoping for a move down. It came, and I sold some premium there. And the idea is that you're maxing each side, but there's a danger you won't get filled on the other side. It'll only end up with a spread on one side, and sometimes that happens. Or sometimes it happens that there's enough time goes by in between where it doesn't turn into an iron condor. You just got two separate spreads, and that's fine too. I really don't care. But this worked out quite nicely. So I will turn my screen scaring off and turn it over to Richard. Screen scaring, I said.
Screen scaring.
I hope I didn't scare anyone with my screen, but yeah.
Yeah, what am I doing? I'll share my my book. It looks in terrible shape at the minute because I'm using loads of margin, but it's fine. It's only play money. So you can see I'm using 70% of initial margin and 85% of maintenance. Oh, sorry, the other way around. Initial and maintenance. Don't do that at home. So what I've been doing on this book today is just cleaning up. I had a bunch of positions. I was actually getting close to the money, actually at the money now. I had some 26,500 calls here, and I don't like being at the money at low implied vol. So I rolled that away to, I think it was end of September or end of October. I'm seeing a lot of really nice vol at the moment out in October. I've been playing around the sort of 15 delta mark. This morning it was more like 50 vol. Now it's 49. I think that's good value. I'll sell 50 vol any day of the week to anyone. Puts or calls actually. On the leg down, I was able to sell some these 20,000 puts. I haven't actually bought those back yet. I need to. But again, such high vol, I don't really want to. That's kind of what I've just been doing, just cleaning up, really, just trying to push all of my risk away from being at the money. And the reason for that, there's two reasons. One is that at the money vols are always much lower, so I'm getting sort of less relative value. This book I hedge once a day, so it kind of does dynamically delta hedge. And so I want to, if the market's going to crawl up, then I want to crawl my hedge up with the market, so that those high vol positions are coming towards me, towards the money. Therefore, the vol is decreasing. Therefore, I'm actually gaining money on the smile hedge. So, you can think of it as like stepping up a curve, and every time you take a step, you win. You get ahead of the game. That's all really. I am slightly surprised by the rally we're seeing. Not shocked by it, but it's kind of.
Well, it's funny because in our private members Telegram channel, we were talking that we were expecting the drop, and we were expecting the drop, and we were positioned to drop, and it dropped. But we did say, hey, this week is full of economic numbers all week, and we were expecting a bit of a roller coaster ride. I didn't expect it to come this high, but Yeah,
well, you never do you? It always overdoes what it's going to do. I wouldn't be surprised to see it sort of capitulate up a bit tomorrow into the weekend and then just stay there. I wouldn't be surprised to see it sell off as everyone, unwinds their lucky long positions.
Mm-hmm.
Interesting to see. I'm also interested to know how many people are hedged for Friday expiry and whether that will actually matter in terms of the options volumes influencing the spot markets. Because it could be that people have been caught out by the rise, what the open interests.
Mm-hmm.
There's a fair amount of money there, right? So you never know. Those 26,500s might need to be unwound and de-hedged, and that might move things around on the weekend.
Yeah, I wouldn't be shocked if maybe we fart around a little bit this area, but I wouldn't be surprised if we drift down, especially into the weekend and even early next week if we went back down somewhere deeper into that range. Because next week I think we do have an FOMC on Wednesday, so I don't expect a lot of action until then. So I wouldn't be surprised if we kind of reverted to the mean a little bit until then.
Yeah, so we might see vols tick up in advance of that on Tuesday evening, which would be quite nice, right?
Yeah.
Sell into that.
And one of the recurring things that I think we've done over decades, I suppose, is look for the vol crush, whether it's on earnings on a stock or a financial number comes out. If you personally think that there's much ado about nothing, you want to sell that pre-hype, that volume pre-hype, and then when there's not a big surprise, the vol collapses and you buy it back cheap. Now, the thing about that I think that we've been noticing is we've tried to deploy that strategy over the last several months, but there really wasn't a lot of buildup before the event. It's almost like people are like, meh, I don't know, and maybe that's just a summer lack of participation. I'm not sure.
One thing I might try at the moment. The Vols service is kind of skewed very slightly down in the first 2 weeks and very slightly up at 1 month. So I'm kind of starting to think, well, what about if I bought a 1 month put spread, maybe 1x2 or 1x3. So actually, I'm already 29th of September. That's 2 weeks. I could do it here. I'm already long these positions here, right? So 50. So I could probably sell, I don't know, the 22k and sell 3 of those versus the 124, for example, and then just put in a sell order at double this price. And so I'm just trying to think of ways to, if there are any upsets to get put into it. I've been doing a bit of back testing this morning, and I can categorically say that in Bitcoin markets, if you systematically buy puts, you lose money. But sometimes you're really glad that you did it because you get a massive spike. But that spike disappears really quickly if the market drops. Because what happens, of course, is the vols get you get huge vol as people start covering their puts, and you need to be at the keyboard in order to take advantage of it, because you then need to sell that long put you've got within 15 minutes of seeing the price. So almost better just to have an order in there waiting and hope that you're catching the turn. And if you're not catching the turn, well, at least you've sold puts at a decent price,
Yeah, that's interesting you say that too, because on that scalp I took a few days back, I got 100 and 200% profit on the first and second and third. I put those orders in beforehand, and I put the next order out at some stupid price, like 500%. Now, I was actually on the inside of that market, but nobody hit me. Why? Because everybody got freaked out. Market makers kind of backed out. My order was there. So if someone's desperate, sometimes you get hit, even though the mark price was lower than my actual price. So just so everyone who's listening understands what you're saying. You're saying right now you're looking at, I'm sorry, what's that time for that? October?
Yeah, so I'm just looking at this 6th of October. They've just come online. This 6th of October, that's kind of 3 weeks, right? 22 days.
So it's basically a 1x3. Yeah.
You could kind of. I'm thinking. I'll say I could buy the 2550, sorry 25,500 in size 1, and then sell the 24,000 in size 3. Say, because what I'm doing is I'm buying 35 volt and selling 40 volt. So I'm kind of happy with that. And then I just put in a buy order, a sell order to all the prices are being switched around now. It's interesting. So yeah, it's going to cost. It's going to cost me about 165, 170 to buy that 25,500. I put in a sell order at sort of 320, and then just wait. And if it doesn't happen, I don't lose any money because my puts will have expired. But it kind of sets me up for a shock. Right? I'm thinking more and more about this, and I wouldn't do this trade if risk reversals were skewed strongly negative, because I would have to. Actually, it might. Thinking about it, it might be even a better trade if they're skewed negative, because I wouldn't have to sell so many out of the monies. So I think that's probably a reasonable idea. This is not advice, but that's kind of the things I'm thinking of. I'll do that when I'm using a bit less margin. At the moment, it's a bit crazy.
A little bit high.
Yeah, I'm just waiting for tomorrow to expire. All this stuff goes out, and then I've got some breathing room.
Yeah, some firepower for sure.
These super short dated positions, I'm just being greedy. I'm actually just wanting not to pay the trading fee to get rid of them. So I'm just kind of in this nail biting race between the market and me.
That's right.
To realize these 25 basis points.
Well, there's the old saying, right? Old option traders never die; they just expire worthless.
If you're lucky.
Yeah, if you're lucky. So
the trouble with these positions is that they're very high gamma, so that the margin system hates them.
That's right. And as you say, tomorrow everything's going to be not a clean slate, but you're going to be rebalanced, and you'll see what's happening. So and I'm just going to mention to everyone a couple of things here. We've only got about 7 minutes left, so please put your questions into the Q&A section so we can answer those quickly. And for anyone who wants to join us on Telegram or join us for 7 days for free, please just check out the offer. Just go to the Rogue Trader Academy website. Anything silver and above, you get access to us chatting all day on Telegram and our weekly Ask Me Anything calls. It's a lot of fun, and we could go play by play there. And so just to clear up, what I'm going to be doing here is if we go any higher in the markets, I'm going to be looking at, I'm not going to say aggressively, but I'll be selling calls or call spreads. I expect that we're going to come back to the mean, fall back into that range. I'm not going to be aggressive on selling puts. I might not sell any at all. And I might just look to sell. If we look like we're going to even out, I wouldn't be surprised if we got stuck in a range until October. And I'm pretty happy to sell iron condors. So that's sort of what I'm looking at right now with this market.
It does look as if it's trying to hunt for 27K, doesn't it?
Yeah, I mean, it absolutely could be. Absolutely could be. Bitcoin has been acting a bit different from ETH this year, But
you know what? I'm just going to buy 0.1 of a future here just to lower the. I'm negative 0.4 bitcoins of delta in dollar terms, so that's a bit rich.
While we are waiting, we do have one question. We have a question here from Alex. So, will you place those put spread orders as Bitcoin or IV denominated?
You mean by price or by IV?
I think that's what he means. Yeah. Well, yeah.
I did try using the IV thing once, and I got caught out by it. It kind of does strange things because it has a different view of the world to you. So these days I just do it by price, and I just sit and wait, or just I try and be a maker, and then if I don't make, I just move into take. But the way I choose the strikes, I mean, I'll choose them based on relative IV. I'm looking to buy low IV and sell high IV, but at some multiple of price that I don't have to, do 1/5 or something egregious. So 1/3 is a nice number. So what's 1/3 of 170? 60, a bit less.
60 something, yeah.
Yeah, so 71.
A little bit less.
So if I do the 71s, I'm doing it at a credit, and I'm also doing it at a 3 volt premium, 4 volt with premium.
Mm-hmm.
So I'm kind of happy with that.
Mm-hmm. Yeah. Yeah, Alex confirms. He says, yeah, that's what he means. And I monkeyed around with the IV thing as well, and I just didn't.
I did a big order with it, and I got filled at what I thought was the right price for the first Bitcoin or two, and then I got zapped for some horrible price for the other 20 Bitcoins, and never touched it again.
Yeah,
but I do look. I am looking at the IV. The price is kind of inconsequential. I'm looking at the IV, then reading off the price, and then I'm dealing on the price.
Just going the other way around. Yeah, absolutely. Yeah. Another question here, follow-up from Alex. He says, what is Deribit's net transaction delta versus just delta? Which one should be used to hedge delta Bitcoin dominated portfolio?
This is really confusing. The net delta removes the delta that you pick up by receiving premium for the trade you did, because when you sell an option on Deribit, you receive the premium as Bitcoins, and of course that Bitcoin has a delta. The question is, do you want to see the delta of that position, including the delta of that premium you're going to get, or do you want to see it net of that premium? So, for example, if you're going to automatically hedge out the premium and turn it into synthetic dollars by selling perpetuals, you'd probably want the net delta. So if you're hedging into dollars, you probably want net delta, and if you're hedging into Bitcoins, you probably want delta. Or the other way around. I can never remember. But have a look at the documentation and keep that in mind, that there is the premium you're paying or receiving has a delta in itself.
Which one do you use, Richard?
They're normally so close that I don't really care. They only really matter when they're deep in the money, I think. And I use a different analytics suite to actually make my decisions. Actually, here. Yeah, in the money it makes a difference. You can get deltas are bigger than 1.
Okay. We got time for 1 or 2 more questions here. We'll move on quick. We're almost out of time. Sylvanus, so this is a good question. So you're talking about putting in a 1/3 put ratio. So buying 1 put, selling 3 against it. How are you going to manage that? How are you going to hedge it if there's a crash? Is the question.
So what I'm kind of hoping is that the crash happens, and I'm obviously going to have spare margin, so I'm not going to do this when I'm on not 86% margin use, and my margin bill will go up, but the in the money long put is going to double in price because of the Vega and the Delta, and then I'm going to instantly sell it and turn it into cash, and then I'm basically then left with kind of at the money short puts at the bottom of a huge crash, and on the basis that there's always going to be some kind of a bounce on a huge crash. Then what it's done is it's sort of helped me get into selling at the bottom, helped me to catch the knife. So there's a bit of judgment involved in if it does dump, how far is it going to go? And I suppose a reasonable rule of thumb is, look, if you work on the basis of a 10% drop in 5 minutes in Bitcoin, but think that it could go as far as 20%, then just make sure you're not going to get hosed if it does go do the 20%. It'll drop 20% in 5 minutes once every year or two, but it'll drop 10% in a minute every 3 months.
Yeah, no, good point. All right, I'm sorry, guys. We are out of time again. Hey, if you want, go to roguetrader.academy. Sign up for any package there, free for 7 days. Anything for silver above, you can join our Telegram channel. We chat all day long with people on there, discuss their trades, discuss different education components. And of course, we have the weekly Ask Me Anything call. So I think that's a wrap. I'm just going to check the poll here. I'm going to end the poll. Well, actually, the numbers came down a little bit. 53% say sideways channel. So basically half the people are sort of in agreement that we're going to go sideways. And I'm not surprised because that's been crypto's pattern lately. It makes kind of a move, then it goes sideways for a few weeks at least. So we'll see what happens.
I start to worry when everyone's in agreement.
Yeah. Maybe we've just got such smart people following us. They're the outside the box of people, Richard.
Well, the more they think it's going to be a channel, and the more strangles they sell, the more they're going to incentivize the market to break out.
Oh, let's not ruin it.
Could be early days yet. I think we're just kind of finding a new channel, aren't we? Really, at the moment.
And we could be, and some technical analysts out there might be saying, no, that last move down broke that channel. We're probably still going to head down, and that could be correct too. And that's why, if we're not going to go sideways, I'm still pointing towards the downside, unless there's a catalyst to push it up. If there's no catalyst to push it up, I don't think we're going up a lot. If we do go up a lot, it's just going to be a slow kind of sideways upward drift. So I'm counting on that.
I always keep my net delta of my book at around about minus 0.2 bitcoins anyway, on the basis that the markets tend to crawl up, but they tend to crash down. So I want to be on the right side of the crash.
Yeah, they sure do. Wonderful. Again, thanks everyone for joining us. Great questions. Let's see what happens next week. We're going to continue to manage the iron condor that you guys put on, which I'll benefit on. But every time when I withdraw that money, I'll be thinking of you. So until next Thursday, catch you later.
Oh, yeah, okay.